So people, yes. So prepare yourself for a multitude of revelations that are about to change the way you look at everything regarding any type of financial affair. Okay, so I got a couple concepts that I mean are clearly just not understood by people. I could just look at people. I could look at like mainstream talk shows on national television and see the way people are talking about certain things. I'm like, these people don't get it. I can literally watch like famous economists and business people talk about stuff and see that they are clearly not understanding some fundamental concepts. I just watched Elon Musk, who's one of my favorite people, so shout out to Elon Musk for all the awesome stuff he does. But he was just talking about how stressful it was to be a controller of a public company, Tesla, because you have to be accountable to the stockholders. And as far as he could tell, the stock just goes up and down for arbitrary reasons. He said at one point the company was like way overvalued. And he was like trying to give an explanation. He didn't have an explanation. He was like, I don't know why. Don't ask me. I'll tell you why. I'll tell you why. Because a stock's price is based entirely on supply and demand. It has nothing to do with company performance. It's correlation and not causation. 100%. I mean, that should be obvious. And I think it will be after explaining this. But as of now, you can go watch like plenty of like financial analysts like for the last like 10 years at least. I mean, I've only been watching it for a couple years, so that's all I really know. But as far as I can tell, like they do not get this stuff, and I don't think they have for a long time. And maybe they just don't want to admit it. Maybe certain people understand how this works, and they don't want to admit it. They want to keep up this idea that company performance is linked with stock price, and stock price is linked with the health of the economy and stuff like that. The stock market is a secondary market. It the prices fluctuate uh, in various stocks because people are literally making offers all throughout the day. You can watch; it's literally tracked on stock market charts. It's entirely based on supply and demand, and all of that supply and demand, for the most part, is speculation. Most of those people who are buying those stocks are buying them because they're trying to make money, okay, off of buying it lower, selling it and selling it high, or doing the opposite, which is short selling and borrowing it at a high price and selling it at a low price to give it, or I don't know how they do it, short selling. You're gonna look that. I don't feel like getting into it, but it's all based on supply and demand. It's all based on speculation. Has nothing to do with company performance. As a matter of fact, Enron is a famous company here in Houston that existed for a while. I can go downtown and look at the vacant, it's not vacant, but the old Enron building. And I watched a documentary on that, and apparently Enron, all they did was just, pretend like they had all this stuff going on, and people would buy the freaking stock, and the stock price went soaring. And the whole scandal was, they were about to be found out, and that inside information that was going around, so everybody sold their stock all of a sudden when it was at a crazy high price, and then the information came out, and then the stock price went down. Some people will say, "Oh, that's messed up because blah blah blah," because they had inside information. But the reality is, I mean, the company performance had nothing to do directly with the stock price. It doesn't. It doesn't. Literally, there are assets out there, like for instance, cryptocurrency just exploded onto the scene. There's no company behind it. It's just an investment vehicle being speculated on, just like stocks are. Enron had no real functional company. It was some kind of company, but it wasn't as kick-ass as everybody was led to believe it was. But the stock price was still soaring. Why is that? Why? Because it's all based on speculation, supply and demand, offers being made throughout the day based on speculation. It's very simple stuff. So let's take a stock chart here. I'm just going to arbitrarily draw some random chart, okay? Here's what you might see. This is like a typical, you see something like that all day. Like here's a company founded in 1978. 2000. Here's 2019. Whatever. I don't know if those are spaced out good, but price, dollars, whatever. Okay, so it might start on pennies. Company grows. They go public. Okay, so right here they go public. Blah blah blah. It's like the IPO. There's initial public offering. They offer the stock at a certain price. Maybe it's like 10 cents. Who knows? Whatever. And people come in and they start speculating. What's happening? All of the demand for stocks, for the most part, unless you're trying to like own the entire company and become like majority shareholder, most of these people, they're buying the stocks at a certain price because they think the price of it's going to go up. So when the price goes up, they can sell it at a higher price and make a profit margin with that range difference. That is pretty much what everybody's doing. On the other hand, the short selling, where you can literally borrow a stock at a high price and wait till the stock and you sell it at the high price. So you make whatever this number is, high price number, and then you sell it, or you sell it, you get that profit, and you buy it back at a low price and return it to who you borrowed it from. So you make like an inverse profit. You sold it, you borrowed it, sold it at a high price, 20K, I don't know. I'm putting big numbers out there, $20, let's just say that, okay, and then you wait till the price went down and bought it back for 10. So you had a $10 profit margin off of short selling, basically reverse profit. But generally speaking, everybody out here on the stock market making any types of offers, they are trying to make money off of the change in price, unless you're trying to buy the majority shares. If you're not trying to buy majority shares and be like the majority shareholder of the company, then you're just out here trying to make good investments that are going to get you a profit margin. That's what everybody on the stock market is doing. They are trying to buy low, sell high, or borrow high, buy back low, and make a little reverse profit. That is what everybody's doing. I guess there's like other stuff like futures and stuff. I don't even feel like getting into that. I'm not even an expert on that, but generally speaking, this is what you see. Now here's something I don't really talk about. I don't even know if I should mention. It's like a secret of like all secrets, kind of, but it's kind of not. I'm just gonna throw it out there because it's about time people learn this type of stuff. Look, this is something I call the investor cycle, and it's basically what you see right here, this run up. What you have is a supply of available stock. Let's say there was the initial public offering, there was 1,000 shares offered. People quickly bought that up. They're holding on to it, and then now there's only like 100 shares available that are being traded. They call it trade volume. Okay, so you have a trade volume like daily, like how many actual shares of the stock are being traded. Okay, so there's 1,000 total, 100 being traded each day. That's the trade volume, and so it's a low supply relative to the 1,000 that's actually issued, and so only 100 a day are being traded. That's I'm not gonna say it's an artificially low supply, but it's a supply that's cut because everybody else is holding on to it. So low supply and people coming in trying to get their hands on it, demand increase. Low supply, high demand, what do? You get higher offers, which is going to make this chart go boom, 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 boom. It's going to go up. And it's kind of like this, it's kind of like a self-fulfilling prophecy, because people look for things that are going up. So if they see a stock going up, they say, oh, crap, jump on that. I need to get my hands on that. That's going to increase the demand itself. And more people are going to be holding on to it while the price is going up. So it's going to lower the supply. I'm just going to draw this. S going low and the demand goes up. That's what's happening right here. The price starts going up. It's like a self-fulfilling prophecy. People are like, oh crap, I gotta jump on that. Demand goes up, higher bids start going, supply goes down. It's just like this. That's why you get these exponential things. And once it gets to a certain point, and people decide to sell for whatever reason, they say, okay, that's a good, exit point right there. I can make a good profit margin right there because I bought down here, now I can sell at that price. Bueno, that's a good profit margin. So people will exit at certain points, and that will instead increase the available supply. Really, you can just kind of see it, depending on what it is. If people see it start slowing down, most people say, okay, it looks like it's slowing down, sell. They start selling, that makes it look like an unattractive investment vehicle, an unattractive asset, and the demand will decrease, and then there'll be less bids going out for it. It'll make it slow down more, and the supply will increase because people are trying to sell more is just being offered, and that'll make it do the opposite. It'll go from going up, it slows down, and people okay, I guess it's time to sell. And it's like a roller coaster. It goes down like super quick because people are like, oh crap, look, it's going down. Get rid of it before I lose this, profit margin possibility. And so you'll always see that every single stock chart. It goes, and it goes right back down, right back down. And some people say this is a bounce right here. It's because that's just the same exact thing over and over. The exact same function of supply and demand, the self-fulfilling prophecy. I call that the investor cycle. I figured that out like 2 years ago. I was looking at cryptocurrencies. I'm like, I'm about to throw my money in it because there's all this hype going around. I'm like, but I didn't feel comfortable. I was like, I don't know why it's going up. I don't even know if this is a good idea. I don't have that much money to just throw around like this. So I said, let me figure this out. I really thought it through. I'm like, oh, this is what's going on. That's how I came to understand this is what's going on with stocks. Same thing's happening with money. See, cryptocurrency is, some people try to consider it a type of money, but it's still being speculated in the same way. And I'm like, oh, look, money, that's kind of money. It's kind of a stock. It's just an investment vehicle. Money is just another thing. It can be the same thing going on. People can speculate on it. The supply of it can decrease. The demand for it can go up based on speculation. And like the United States dollar is used as a reserve currency, that'll increase the demand for it. There's inflation and deflation, which changes the supply, and its value will change based on all those factors. It's the same exact thing. But this is why you see prices of things changing. This is why Elon Musk was like, it's stressful trying to run a publicly run company because you don't know why the price of the stock's doing what it's doing. Like, he even admitted like it was overpriced. He said he said he was making like I think it was like a yearly profit like $2 billion, and the stock price was like the net worth of the company was like at 20. He's like, it's because it's based on speculation. It doesn't even have to have a company at all. Like Enron. Enron didn't have anything going on. It wasn't based on its freaking profits. It wasn't based on anything. It's based on people saying, oh, I think this is a good investment. And they say, okay, I'm going to buy this because I think it's a good investment. It used to be a rumor. They can say, oh, yeah, we're doing great. And I say, okay, I'll buy that. Everybody else going to buy it, so I'm going to buy it right now, sooner. And when the price goes up, I'm going to sell it. Everybody's just competing to get ahead of that run up so they can sell, so they can have that profit range right there. So everybody wants to get in as soon as possible, so they all compete to get in. That's when the prices start going up. Some people are late and they still are dumb enough to buy way up here right before it goes down. And those are the people that the early investors are going to actually sell to get out. They're going to cash out on these dummies who buy like right before it goes down. So some people are smart. They get up in early, they're holding on to it, they get the profit margin, and then at some point the price is high. Like the people who really understand this stuff, and I'm explaining so hopefully you can understand. The people who understand this stuff, they're wise enough to know when it's time to sell, and they'll have somebody to sell to because somebody's stupid enough to buy right before it goes back down. This is like, there's some stuff most people don't know, man. I'm giving you like the secrets of the trade here, but I don't have any stock investments. I just know this stuff because I've figured it out. So when you hear people talk about stock prices or an indicator of how well the economy's doing, that's stupid. Enron was a company that had really nothing going on. They just had a facade of being successful, and their stock price was soaring. That's not a real indicator of what the company's doing. Real indicator of what the company's doing is company like numbers, like profit, like operation costs versus total net income, profit margins, and just the health, the demand for the product they're making, all that stuff. Those are real indicators of how a company's doing. And you look at how many of those companies you have in your country, whatever, and the economy functioning. That's how you really get the understanding of how healthy your economy is. It's not, the stock market is it's like gambling. It's a speculative market, and it's literally it's a secondary market. The fluctuations are independent of what any company's doing. A company can be doing great, but a rumor about something can make people just say, "Oh, I don't want to hold on to this anymore. That's dangerous." So they can cause people to sell, even if the company's doing great. The company can have crazy good freaking profit going on, but if some rumor comes up and everybody's scared, they say, "Okay, sell, sell, sell." The stock price can plummet, or it could be a bullshit company. It can be a company that's not doing anything, and they just have rumors that they're doing good. Everybody's like, "Okay, buy, buy, buy." It happens all day. It happens all day. Um, so yeah, some pretty basic stuff. Stock market health is not an indicator of how the economy is doing at all, in any way, shape, or form. It's correlation and not causation. If a company's doing good, most people are like, okay, I'm gonna buy because that means everybody else is gonna buy. Everybody usually they hear the news, the quarterly earnings reports and stuff, and like, okay, they listen to it, and it's like a herd mentality. They think if good news comes out, then everybody's gonna buy, so they want to be ahead of the curve, just like I said, so they can, be holding on to this shit while the price goes up, so they can exit at a high point. And it's like that's the only thing driving it. It's just speculation, want to be ahead of the curve. This investor cycle, supply and demand. That's it, bro. That's it. And a lot of people don't understand this. I'm telling you, I can watch people on like mainstream television just say, "Oh, like they don't talk about this. This is the fundamental stuff, dude." And I was actually, I want to keep this myself for a while because I was like, I could use this as an investment strategy for myself. I kind of wanted to like charge people for like, I was thinking about opening like investment firm. I don't know. I'm not good at that. I don't know how to get that stuff done. But at this point, I'm just like, dude, just tell people. It's that simple. So this is it. And it's crazy because how people are. If you give people some free info, they don't value it. You give people something for free, they don't value it. You put a price tag on this shit, people be like, oh my gosh, like this is the best info ever. I could probably charge for this right now. If people don't listen, I might just charge for it. I might just, like make a little course online and be like, $1,000 for this info, you know what I'm saying? And then people will be like, oh, okay, now they'll think it's actually worth something. If I'm just spitting this out for free, they think it ain't worth nothing. It is. This is the real stuff. This is stuff. I'm telling you, I haven't heard nobody talking about this stuff. I hear people kind of get glimpses of it. I remember when the cryptocurrency thing was happening, Warren Buffett was like, don't do it, it's a bubble. What does he mean? He means it's just a speculative bubble. That's what it is. But he didn't explain what that is, and a lot of people didn't hear him out. A lot of people are like, whatever, Warren Buffett, you're just a hater. And sure enough, Bitcoin got to like 20K and then popped. It popped because it's speculation. And at some point, the demand slowed down for it, so the price wasn't going up anymore. Then the people are holding on to it. Like, I guess this is time to leave. This time for the exit strategy. So they sold. Increased the supply while the demand's decreasing. The whole chart just starts to curve off, and that's a roller coaster drop. And then it went all the way down like 6K. I'm telling you, Warren Buffett was kind of trying to say it, but he didn't have like the specific details. You know what I'm saying? Even Warren Buffett, I'm telling you, I've not seen anybody talk about this stuff. You can go study the archives of people, mainstream television, MSNBC, freaking any business, Forbes, I don't care. Go study it. I have not seen anybody talk about this. I would think if somebody knew this, could like explain it this clearly, it would have been like common info. But I was looking for info like this when I was trying to buy Bitcoin. I was like, I need to know more. I don't feel comfortable. I don't feel like all this advice that I'm getting is like real good. I feel like it's kind of just too much of a risk for me, you know what I mean? To just throw a bunch of money in there. So I was like, I didn't really think this through and figure it out. So sure enough, that's what I did. That's what I figured out, and there you go. Shame it's you guys, because at this point I've been holding on to this info for like at least like 2 years now. I started like a little YouTube channel where I talk about some stuff like this, and I was trying to create like a course because there was this whole crypto boom, and I was like, yeah, like let's teach people this type of stuff, charge them for that. I saw other people doing stuff like that, so I was like, probably make a little profit like that. But I'm not good at making courses and stuff. This is really low production quality, but the content's good. The production quality, yeah, I'm not Hollywood, quality right here. But yeah. So hopefully this content is helpful. I know it is. I know that this is nobody's been talking about this. I know this. I've looked. I was searching diligently for like good info, good advice, and I could not find any. I was like, I don't feel comfortable throwing my money in this crypto market because it just doesn't. I didn't hear anything that was like assuring. So I was like, I gotta figure this out. Sure enough, boom, I figured it all out. So I know stuff. I took the time to think. Now here you go. You're welcome. This is just really the reason I kind of want to share this is because there's so much like BS going around about it. Like the economy, the stock market health is not an indicator of how the economy is doing. It's not. The fact that that's always brought up is stupid. Elon Musk, he's talking about how stressful it is to run a publicly owned company because the stock price is arbitrarily changing. He needs to know. Don't stress out, bro. This is what's going on. I got you. Don't sweat it. Like I'm letting people know. I'm letting everybody know because I think that it's a problem that needs to be like rearranged in people's brains. You know what I'm saying? So there you go. Hope you learned some simple stuff. Pretty straightforward, man. Um, like I said, this is the same thing happening with money. Money is just another asset that people there's supply and demand, and there's reasons it goes up and down, dude. Like the value of anything in the economy has the same thing going on. There's a supply of it and the demand for it, and its values can go up and down based on the balance of supply and demand. And with stocks, it just happens to be speculation that's really driving the demand for it. And people want to buy stocks to earn a profit. Other things people actually buy to consume. Money people there's a demand for it because they use it as a medium of exchange, and there's different reasons for demand, and there's varying supplies based on how much is available, how much people are holding on to, how much is left, and how much is created. There's inflation and deflation of money, so all of that plays a part in kind of getting a real value of anything in the economy, and you know. I could go way deeper. I could talk about how money has a value, and we're judging the value of this based on dollar amounts, but the dollar amounts changing too. So it's like there's like relative values to like different goods in the economy, and there's a lot more to it. So there's a way to derive like real value in the economy, but it's all kind of based on relative values of different assets and stuff and commodities. Um, that's how they kind of measure GDP, like real GDP, is like with a basket of commodities, like, and that's how they like see the change in inflation and everything. But even then, there's a changing supply of those commodities and a changing demand for them. So it's not perfect, but you can get a general idea like of relative values of goods and services, based on how much is being traded for each one. How much that basket of goods. Will be traded for in dollars or whatever. So you get those relative values, and that's how you really kind of judge the value of anything in the economy. It's all relative, how much of this you'll trade for that, and that's really at the end of the day, the value of anything is determined by how much of anything else somebody will trade for it. How much labor will you trade for something? How much labor will you trade for a dollar? How many dollars will you trade for a basket of goods? It's all relative, and what determines how much of anything somebody will trade for it is how much they personally want it. And there's personal reasons that people want certain things. In this case, people want stocks to make a profit. Other cases, it's because they want to eat something. Or in other cases, they want a house to live in or a car to drive. Whatever. People have their personal reasons that they want something. That's what drives how much of anything else they're willing to trade for it. And that's what it all comes down to. Personal uh, desire to have something, and how much of anything else you want to trade for, time, energy, whatever. And there's all a bunch of different relative values in the economy based on that basic premise, principle, whatever. And with that being said, very basic economic stuff right there. Like I said, I've been holding on to this for a long time, for like 2 years now. I made a whole bunch of videos as soon as I learned this stuff. They're kind of even lower production quality than this, but I'm not a pro at this stuff. I just know what I'm talking about. So I don't feel like writing a book. I'm too lazy. So that's how I do it. Make some quick videos, and there you go. That being said, I'm gonna leave it at that. Hopefully y'all got some out of this, and hopefully this has a positive impact on the world, because I want people to understand these concepts. That way they quit getting played or whatever, being told some BS and, not knowing any better, man. Wake up, learn what's happening. I'm leaving it at that. Stay safe, people. Elon Musk, don't stress, bro. I'm trying to teach these people what's going on so they don't think it's you, not doing your job. We know you're doing your job, bro. You're changing the world, bro. Keep it up. I'm going to leave it at that. Stay safe, people. Much love.